Every year, millions of freelancers finish a job, get paid, and never open the one form that decides whether they overpay the IRS. She made $41,000 freelancing this year. She has no idea how much of that she actually owes, or how much she's about to lose. Two freelancers, same income, same year. One pays $4,000 more than the other. And it isn't luck, it's one form. That difference isn't about who earned more. It's about who understood what the IRS actually lets you subtract before it calculates what you owe. Open Schedule C for the first time and it looks built for accountants. Rows of codes, categories, and language no one explained to you in school. A rideshare driver we'll call Marcus just doesn't file it at all. He assumes since taxes get withheld somewhere, someone else is handling this. Another freelancer files Schedule C every year, but guesses at the expense categories, which quietly raises her audit risk without her realizing it. Somewhere in a shoebox, a car console, or a deleted email folder are the receipts that could have lowered what both of them owe. That envelope from the beginning finally gets opened. Inside isn't a bill, it's a notice asking her to explain a number she can't explain. The problem was never her income. It was one specific form, and almost no one ever explains what it's actually asking freelancers to do. Some freelancers overpay for years without knowing it. They report income honestly but never subtract a single legitimate business expense. He picks a business code at random from a list of hundreds, unsure whether it even matches the freelance design work he actually does. A freelance photographer drives to shoots constantly, but has never logged a single mile, meaning she can't claim what she's legally owed. Her spare bedroom is half office, half storage. She's heard about a home office deduction but has no idea if her space even qualifies. Tax season disrupts everything. No more routines pause while freelancers hunt for invoices scattered across 5 different apps and inboxes. A canceled dinner plan, a short, distracted reply to a partner's question. The paperwork doesn't just cost money, it costs attention. At 11 p.m., she searches Do Freelancers Need Schedule C for the 3rd time this year, still not confident enough to trust the answer. He buys tax software built for W-2 employees, not freelancers, then wonders why it can't find a place to enter his business expenses. Her 1099 form says one number, her bank deposits say another. Neither of them explains which figures Schedule C actually wants from her.
So,
when a parent asks how taxes are going this year, the answer is a fast fine, followed by an immediate change of subject. A small notice arrives listing an underpayment penalty, a fee that exists specifically because Schedule C was never filed correctly. Different people, different mistakes, but one thread connects all of them. Nobody ever explained what Schedule C is actually built to do. Schedule C exists for one purpose, to calculate the actual profit from your freelance work, not just the total amount you were paid. Business income includes every dollar earned freelancing, the 1099 total, plus cash payments, plus anything a client paid without a form at all. All of that gets added together and written on one single line, gross receipts, the starting point every other calculation builds from. Business expenses aren't a guess. They're anything ordinary and necessary for the work, sorted into specific categories the form already provides. A portion of the phone bill, a share of the internet, business-related software subscriptions, small amounts that add up to real savings. Not everything qualifies. A personal vacation isn't a business trip just because a client email got answered from the hotel pool. That 6-digit business code isn't random. It just needs to describe, in general terms, the main service the freelancer actually provides. Subtract total expenses from total income, and what's left is net profit, the actual number that determines what gets taxed. That profit number doesn't stay on Schedule C. It travels onto the main tax return, where it finally gets taxed alongside everything else. There's also a separate tax most freelancers don't expect: self-employment tax, covering the Social Security and Medicare an employer usually splits. A regular paycheck already has taxes withheld automatically. A freelance payment doesn't, which is exactly why that amount catches people off guard. That spare bedroom from earlier does qualify. Once a specific area is used regularly and only for work, not for storage or guests too. The photographer from earlier finally opens that mileage app, 3 months too late to recover the trips she never logged. For most freelancers, only a handful of categories ever apply: supplies, software, a portion of the phone bill, and vehicle costs. Once the categories are this specific, Schedule C stops looking like a test. It starts looking like a checklist anyone could actually follow. But most freelancers never reach this clarity. Instead, they try shortcuts, and those shortcuts usually create more problems than they solve. One common shortcut: just round the profit number down and hope it's close enough. It rarely holds up, and it never holds up well. Marcus, the driver from earlier, still hasn't filed Schedule C at all. He's just decided the notice will probably never actually come. Some overcorrect instead, claiming personal expenses as business ones out of fear of missing deductions, which creates a different kind of risk. A friend mentions they just deduct everything and never got audited. That advice sounds reassuring and applies to almost nobody the same way. Someone else downloads a budgeting app instead of tax software, expecting it to somehow calculate a deduction it was never built to track. Each day, the form gets closer to a deadline and further from being started. Postponing doesn't make Schedule C easier, it just narrows the runway. For many, the real block isn't the math. It's a vague fear of the word audit, strong enough to stall a form that isn't actually that complicated. One freelancer books an accountant instead, a smart idea in theory, until the invoice arrives costing more than the deductions actually saved. Pre-tax software quietly stops being free the moment self-employment income gets entered, upgrading to a paid tier without much warning. A freelancer copies last year's expense total instead of this year's, not realizing the mistake until the numbers obviously don't add up. By late in the season, half the form is filled, half is blank, and the freelancer has simply stopped, unsure which parts still matter. Guessing, ignoring, overcorrecting, outsourcing blindly, none of it actually solves the problem. It just delays the same unanswered question. None of this requires an accounting degree. It requires knowing which few fields actually apply to a freelancer like you, and filling those in order. Start by gathering every 1099, every payment app summary, and every invoice into one place, even the ones that never generated a form. Next, sweep through bank and card statements looking only for the categories that already matter: supplies, software, phone, and vehicle costs. Choosing the business code takes 30 seconds once you search by keyword instead of scrolling. Most freelance work maps to an obvious match. Line 9 asks for vehicle expenses, and freelancers get a choice: track a flat rate per mile or track actual gas, repairs, and insurance costs. A different freelancer tracks mileage automatically from day one, letting an app log each trip so nothing has to be reconstructed later. That measured space from earlier becomes a simple percentage of the home's total square footage, and that percentage applies to real household costs. Free and affordable software built specifically for self-employed filers exists. It just needs to be chosen deliberately, not grabbed at random. Freelancers who expect to owe more than a small threshold can pay estimated taxes quarterly, avoiding one large shock at the end of the year. That self-employment tax from earlier isn't a penalty. It's simply covering both halves of Social Security and Medicare, a regular job splits with an employer. Marcus finally downloads the software, gathers his rideshare earnings summary, and starts the form he'd been avoiding for over a year. The freelancer who overclaimed earlier goes back through her list, removing the personal groceries and keeping only what's genuinely business-related. With accurate numbers and matching documentation, the fear from earlier loses most of its weight. The form now reflects reality, not guesswork. The form that once looked like an MBA exam now looks like 4 categories, 1 income line, and a single number carried to the main return. A driver, a designer, a photographer. Different work, same form, same handful of fields, each one now finished instead of feared. Next year, the process takes less time because the habit of logging mileage, saving receipts, and tracking income starts on day 1 instead of April. By the end, the return is filed, not perfectly but accurately, and for the first time, with real understanding behind every number. This year's refund is different, not dramatic, just accurate, reflecting deductions that were finally claimed instead of quietly left behind. A new envelope arrives from the IRS. This time it's opened the same day it's received. No delay, no dread, just information. Track income as it comes in, save receipts as they happen, log mileage automatically, and let Schedule C simply reflect a year already organized. The stress was never really about the money. It was about not knowing. And that part, at least, doesn't have to happen again. Schedule C was never designed to be simple. But for a freelancer who knows exactly what it's asking, it stops being something to fear. If this made Schedule C feel clearer, share it with a freelancer who needs it. Drop your biggest tax question below and subscribe for the next plain English guide.